Imagine this. You're scrolling through your phone and you see a stock skyrocketing. Everyone's talking about it. But here's the problem. You have no idea what you're looking at. The lines, the numbers, the jargon. It's like trying to read a foreign language. What if I told you that in just 10 minutes, you could unlock the secrets of stock charts and start making smarter, more confident investment decisions? Sounds too good to be true? Stick around, because today, I'm going to teach you exactly how to read a stock chart like a pro. And trust me, by the end of this video, you'll wonder why you didn't learn this sooner. Let's dive in. Oh, and don't worry. This isn't one of those boring finance lectures. No suit and tie jargon here. Just straight up practical knowledge you can use today. Ready? Let's go. First things first, let's break down the basics. Every stock chart has three key elements: the price, the time frame, and the volume. Think of it like a story. The price tells you what's happening. The time frame tells you when it's happening, and the volume tells you how much action is going on. For example, if you see a line shooting up, that means the stock price is rising. But here's the kicker. If the volume is low, it might just be a fluke. High volume? That's when things get real. It means people are buying and selling like crazy, and you should pay attention. Now here's a question for you. If you saw a stock price soaring but with barely any volume, would you jump in? Or would you wait for more confirmation? Think about it. We'll come back to this later. But before we get into the juicy stuff, let's talk about the real secret to reading stock charts: understanding trends. And trust me, this is where things get exciting. All right, here's where the magic happens. Trends are the backbone of stock charts. There are three types: uptrends, downtrends, and sideways trends. An uptrend is when the stock is consistently making higher highs and higher lows. It's like climbing a staircase. Each step takes you higher. On the flip side, a downtrend is when the stock is making lower highs and lower lows. Think of it as sliding down a hill. And then there's the sideways trend, when the stock is just bouncing around in a range. It's like a tug of war between buyers and sellers. Sideways trends are like that friend who can't decide where to eat. Pizza, sushi, burgers, just pick something already. But here's the thing. If you can spot these trends early, you can make moves before everyone else does. Imagine buying a stock at the start of an uptrend and riding it all the way up. That's how wealth is built. And the best part? You don't need to be a Wall Street expert to do it. Now, let's talk about the real game changer: support and resistance levels. This is where you'll learn how to predict where a stock might go next. Ready to level up? Support and resistance levels are like invisible walls that stocks bounce off of. Support is the price level where a stock tends to stop falling and start rising. It's like a safety net. Resistance, on the other hand, is where a stock struggles to break through. It's like a ceiling. Here's the trick. When a stock breaks through resistance, it often becomes the new support. And when it falls below support, that level becomes the new resistance. It's like a game of financial tug-of-war. Quick question. If you saw a stock breaking through resistance with high volume, what would you do? Buy, sell, or wait and see? Think about it, because this is where the big money is made. Imagine spotting a stock breaking through resistance, jumping in early, and watching it soar. That's the power of understanding support and resistance. It's not just about reading charts. It's about predicting the future. But before you start trading like a pro, there's one more thing you need to know. And trust me, this could save you from making a huge mistake. All right, let's bring it all together. You've got the basics: price, time frame, and volume. You've got trends, uptrends, downtrends, and sideways trends. And you've got support and resistance levels. Now here's the golden rule. Always look for confirmation. Don't just rely on one indicator. Look for multiple signals, like a trend breaking through resistance with high volume. That's when you know it's real. But here's the scary part. If you don't take the time to learn this, you could end up making emotional decisions and losing money. Don't let that be you. Take control of your financial future today. And if you're ready to take your investing game to the next level, I've got something special for you. Check out my next video on the power of compounding, where I'll show you how to turn small investments into life-changing wealth. Trust me, you don't want to miss this. Thanks for watching, and remember, the best time to start investing was yesterday. The second best time is today. See you in the next video.